Let's get right to the floor show. Scott Bauer live from the SIBO. Scott, tell me what the trading floor has been like here. I mean, Jamie Dimon is always a little agitated. So if you look at those stocks, let's focus on Citi. Citi charging higher. Every one of its 5 divisions posted record third quarter revenue. What does that tell you? And how is the floor moving down there?
The floor has been active all day long. It was active real early out of the gate when S&Ps were down 70, 80 points. And then, as we started getting the recovery in the big bank stocks like Goldman and JP, as they started recovering, and then we got the news out, from Powell's interview. Boy, that's what really propelled this market, Liz, and it was deafening. It still is very loud right now. It is still very active. When I was talking to a bunch of these traders earlier, they couldn't believe how quickly we made the shift from, the Dow being down 600, S&Ps being down 70, 80, to actually going positive. So the traders here love the volatility, obviously. For the retail investor, for people watching here, yes, I think they should be a little bit cautious. The overall optimism down here, though, excuse me, is still that this is very much a buy the dip marketplace. And I think both things can be true at once, Liz, where you can have that caution, like we always talk about, and want to have some protection and buy when you can, not when you have to, but also be very optimistic for what's going on. And if the banks are any indication here with the stellar earnings, with the stellar outlook, then, we could be in for more new highs. That doesn't mean we're not going to have volatility. And the VIX is here sitting, I'm looking right now, just under 20. But boy, oh boy, there's a lot of optimism.
We're showing 3-day charts of the Dow, S&P, and NASDAQ, and you can see it. It rises, dips, rises, dips, rises. So, yeah, it's almost like follow the bouncing ball. You're right about volatility here. Clearly, we've got, and the Russell, by the way, on pace for a record high for the small and mid caps. Yep. Do you think that's because of the tone that Jay Powell set? I mean, if anybody benefits from rate cuts, it's the small and mid caps who borrow a lot. So if the cost of borrowing goes down, there's optimism for those names.
Oh, there's no doubt about it. And while he was talking, I was kind of texting and talking to a lot of my colleagues in the space that, especially that are some of the HFTs, the high frequency traders, who they look for any word that Powell says or any phrase, and that can really change the marketplace. There's no question today, his tone was decidedly dovish. Now, that may be some concern because the concern is the labor market, and couple that with what Jamie Dimon said earlier this morning. But there is no question that when he talked about, the Fed, the quantitative tightening cycle pretty much being finished, yes, that's when you saw the Russell take off and that, catapulting it to all-time highs here. And yeah, that's part of the optimism that is kind of on the floor here, and my colleagues in this business that they're seeing now, albeit with still having the question mark of we still have to get these data points that have been delayed. Who knows when they're going to come out? Yes, we know the weakening labor force, but yes, I think they're going to cut in October, and they'll probably cut in December also.
And again, let's not forget this daisy chain that just keeps lengthening with all of these deals when it comes to AI, and it seems like all roads lead back to OpenAI. We got more news, positive news for AMD. Oracle's going to be using their chips for their cloud data centers, which OpenAI needs all of that capacity. And then you just have continuing multi-billion-dollar deals. Does this have a longer tail, or do you see, at least at a certain point, a little bit of the pressure being let out of the balloon that we know is kind of happening right now?
I do think there's a little pressure being let out, but so many people, want to reference or compare this to what happened back in 2000, and I think there's a decided difference because when people were piling into all the new gen, tech stocks back then, people were looking at companies that had nothing. They had no earnings. They had very little revenue. They had, just they weren't going to make money for a while. And when you look at the AI space, and obviously I'm not talking about the Nvidias and Googles and Metas. But when you look at many of these other companies out there, they actually have revenue. They actually have a business model. Now, maybe they are a little bit, overpriced. Who knows? But I think that's really the big difference between now and what people are talking or comparing to the 2000 bubble. So I think we're in a good spot. Sure, there's probably some overzealous people out there investing in companies that maybe they shouldn't have the valuations that they do. But I don't think we are anywhere near an AI bubble.
Okay, well, we'll save that. We'll put it in the vault and scare it up later in case something happens. Nvidia, it's interesting because AMD, its sort of biggest competitor, got this next-gen deal with Oracle. Nvidia is the worst performer on the Dow Jones Industrials, falling about 3.5%. Scott, good to see you. Thank you so much. Busy action day there at the SIBO. Thank you.